Time for the market report. Prices still going up, farm income not so much.
That's right, Mike. We're going to get into that and what's moving the markets. But first, the numbers. What were the week's biggest gains and losses? And then the USDA released their farm income forecast. We talked to an extension economist about it. And finally, row crop prices making moves. What's the cause? So, markets closed, still trending up with row crop split. Let's take a look. The week's biggest gain, soybeans up 51 cents, nearly a 5% increase from the previous week. The week's biggest loss, cotton, down over 2 cents. That's nearly a 3.5% decrease from the previous week. So the USDA ERS recently released its annual farm sector income and finances forecast. Included are numbers reflecting farm income from 2025 and predictions for this year as well. I spoke with MSU extension economist Dr. Kevin Kim about this report and its implications.
First, the ERS substantially lowered their net farm income expectation for 2025. In their early report released in September 2025, they estimated that the net farm income for 2025 will increase almost 40% relative to 2024. But now, with this new report that just got released last week, the ERS is now estimating that the net farm income will only go up by half of what they initially anticipated. For 2026, actually now they estimate that the net farm income level will go down for the overall agricultural sector. And of course, we want to look into cash receipts depending on production. Now, for the corn producers, the ERS estimates that So while corn receipt is expected to increase slightly by 3%, soybean cash receipt is expected to remain on the same level. Now, for the rice producer cash receipt, we are expecting 12.5% decrease for the rice producers, and this will be triggered by lower price and lower quantities sold. For the cotton lint cash receipt, we are expecting a tiny decrease in cash receipt. So overall livestock cash receipt is expected to go down by 6%, but when we look into different production, the stories are pretty different. For the cattle producers, actually cash receipts are expected to increase by 3%. A big decrease is expected for chicken eggs. Actually, if you look at the numbers, ERS estimates that chicken egg cash receipt will decrease by 66%, which is a very big margin. For the broiler producers, cash receipt is expected to sort of remain on the same level. The government payment is anticipated to substantially increase this year. So last year, for 2025, ARC and PLC payments combined, the total government payment from these programs were about $3 billion. For 2026, we expect these payments to go up to $15 billion under the One Big Beautiful Big Act. So there will be a substantial government subsidy.
In our row report this week, grains making an impact in the markets, specifically soybeans and corn. So, what's the cause of these moves? Analyst Christy Van Anchizet characterizes it as global trade issues affecting domestic prices.
Over the last 2 or 3 weeks, I think people have decided that China met their 12 million metric ton. We haven't really seen any private sales lately, and that they just kind of assumed, hey, beans got their run, let's step away. You also had managed money really step away from the market as well. And so I think people just kind of gave up on soybeans. So as soon as you started to see that information, you saw those buyers start to come in. And then I think it was that FOMO, right? The fear of missing out, that people all of a sudden jumped in and they said, hey, I don't want to sell my beans too low. Like if they're going to come in here and buy these, I need to be part of this. And then managed money really was flat. And so you had them jump in. I think it was that spiral that led it higher. And it has been a while since I have had a wild day in the grain markets. And when it started to creep and then it jumped from pretty much 30 to 50 cents higher, And then before you know it, it was back down to 25 cents. And you just had a lot of people saying, hey, I want to be part of this movement. And I think a lot of marketing got done, which was the smart thing to do, in my opinion. So we actually moved to 100% marketed in old crop soybeans off this move. We were 90, so it was only 10%, but we decided to move on the rest of them. And we really went with either sales if you had a decent basis. Otherwise, I really like April and May puts. You get a little bit of carry into the situation. And April is actually very reasonably priced because it doesn't get you to the March 31st crop report. So due to that, you have a little bit of that lower volatility, lower price action, lower interest because people want to see the report. I don't think you need to see the report for downside protection in soybeans. I could be wrong on that. You never know. But I think the writing on the wall is that we're not going to see the bean acres and that we're going to have to do something about it. It was really nice to see follow through again today after that sell off initially from the high. But really, when I look at beans, I have really hard concerns about them buying another 8 million metric ton. So you're asking them to buy with Brazil having fresh soybeans on the way.
And that's it for a deeper look into the markets.